I want to talk about this new tool that you and Bernard wrote about over the weekend. Single stock futures. It allows investors to hedge or speculate on more than 50 of the largest U.S. companies. For people who are hearing this or watching, they're saying, wait a second, this sounds familiar. Haven't they done this before? Apparently this time is different.
Well, it's different for a number of reasons. I would say, first and foremost, retail participation. When this was tried years ago, there wasn't as much of the retail or individual investor.
We didn't have phones that we could just place trade-ons for free. Right?
And think about the SpaceX IPO that just happened and the emphasis on retail trader participation. This new tool is going to be another way that retail can participate, even if they weren't able to buy a stock of the SpaceX IPO because it was oversubscribed, they couldn't get in, they couldn't get an allocation. They can now place a wager through the single stock futures, and it will give them exposure to the price of SpaceX, but not owning the underlying shares. It's just another way to place your bet on where you're seeing this name or other names move in terms of their price movement.
I'm really glad you brought up SpaceX. Rick Wurster was on last week.
That's what I was thinking
what did he tell us? He told us none of our clients got what they wanted in terms of the amount of SpaceX stock that they wanted. Or the allocation that they wanted, but everybody got something. But none of them got as much as they wanted.
Right. There was incredible interest. So is that what this is all about? Essentially, is giving people access to something that, new issuance, IPOs, is that really what it's targeting?
I think that's one piece of the puzzle. CME is touting this as a hedging tool. So it's not just for the retail participant that couldn't get into SpaceX's IPO or future IPOs. It's meant to be another avenue, think for the institutional investor that has exposure. And if you want to hedge your bets and you want to, just like you would use options, but they are touting this also as a tool similar to options. It gives you exposure. What is different from options is that this is somewhat of an easier tool because you don't have to take into account the gamma or any of the Greek considerations that are an advanced
which I
form
learned about
of
for
investing.
The first time by reading your story.
It was pretty funny.
Yeah, I mean, it's I have no idea how any of that stuff works. The question, though, that I think Carol brought this up on our call this morning when we were talking about this is, what's potential downside here for people who are, have easier ways to do this stuff, but does it mean easier ways to part with their money?
Well, and on that, you've got, this is to give it access to retail investors, but you have institutional investors playing with it too. So retail investors, beware.
Yes. So I think in terms of the potential downsides or the risks that have been identified, people have brought up volatility. If there is major price swings in these names, the futures are going to be, again, it's a tool to help offset some price swings, but if there's more movement and there's more volatility overall, the products are going to be harder to price or to at least hedge your bets in a way that has more certainty. So I think that that's one thing that has been brought up. This is a new tool. So for any tool that is being released into the market, there's a question of liquidity, how much activities are going to be, who's going to support it, who are the market makers that are going to support it. But presumably there is a lot of demand for this. And again, the tool is not so dissimilar to options. So it's not as if you are putting out an entirely new asset class that is being tested. There's a lot of use case for putting out tools like this.
On the CME too?
Always. Whenever there's a new product, that's going to mean more dollar signs for a venue like CME that offers these products.
So does everybody think it's going to work this time, even though it didn't work 25 years ago?
I think that there's a lot of evidence to support it, again, from the just growth of the retail investor. We have seen a lot of their micro or mini products, as they called them, outside of just these single stock futures. Those have got a lot of demand. And when I say mini, micro, it just means that they're in smaller sizes so that they're more accessible to folks that have less money to trade with. So we've seen interest from other, again, of the smaller products. So that gives evidence to point to the fact that this could be more successful on its second launch.
There's a lot of also competition, right? Increasingly among exchanges.
There is. So new products. You have prediction markets that are launching perps. It's just becoming which tool is going to be, I think, a lot of times these venues like to point to the ease at which some of these tools, and ease can mean a number of things, but first and foremost, if you're talking about a retail investor, it's, do you understand the underlying product, what your exposures and the risks are, and how do you use it? I think that education for products that are more advanced is something that the venues like to tout. They like to say, we educate our investors and they know what they're buying into. That's why we've seen the rise in options. You've got more sophisticated retail participation. But when you have new products that are touted because of how easy they are to understand and to use, that becomes their new tagline.
You know, I described you as a finance reporter who covers markets, and I didn't mean to say you cover the ins and outs of the daily moves on markets. What I mean is you actually literally cover the market structure and market structure, the pipes,
the plumbing.
The plumbing, as everybody likes to say.
Yes.
And there's, it doesn't get a lot of attention until there's an issue and they need to call the plumber.
That's right.
But these days it is getting a lot of attention because you have the rise of prediction markets. And we're going to talk about some prediction markets in just a second and some sort of like very strange bedfellows, I think some people would say. But I'm curious how your beat has changed just over the last few months now that everybody is kind of getting in on CME's turf. Like CME and SIBO, for years, they were the only ones that were doing this sort of thing, and Intercontinental Exchange, but now there's like all these upstarts.
Well, it's innovation, right? We're in a new regulatory regime, and what it has meant is in the last year or so, you've seen upstarts that have really gained traction because they're able to actually launch products. They're not just asking permission or asking for forgiveness. They're given the green light to just go ahead. And because of that, when you see these new products and some of these upstarts, their benefit is that they can come at this with new products, but they also have new technology. Some of the interface is a little bit more, it is exactly tailored to the retail investor. Whereas if you think about CME especially, and somewhat SIBO, they have come from the place of serving institutions. Those institutions are used to certain products and also certain interfaces that might seem outdated to a retail customer that is coming to the market fresh and is looking for an app that, again, easy to use, easy to understand. They want to have, it's both ease and accessibility. So they want to be able to see certain buttons are going to work in certain ways, and it's not complicated, and you know exactly which interface you need to go to. So I think that if you are an incumbent like CME, you're coming at it with the benefit of you have the foundation, you have the years of trust and partnerships and clients that you have been serving. That's a huge, they've rested on those laurels for many, many years. And now you have these new players coming, and they are fresh and they're building their brand, and they are using the retail customer as an entryway, and they want to bring the institutions in too. I will say that. Both players are coming at this, that it's not as if CME is saying, oh, we serve institutions, we're only going to serve institutions. They're building their retail clients. And in the same capacity, you have a Kalshi that is serving the retail investor. They're primarily in sports, but they want the institutions to come in and start trading things outside of sports.
Well, then there's Fanatics. Tell us about this
back
other
to
story.
Sports.
Yeah.
Yes.
It all goes back there.
Yes.
Tell us about this deal.
So Fanatics has been in prediction markets. They've been working with Crypto.com. And again, you think of Fanatics as this customer, client first. They're selling sports jerseys, and they have all of these partnerships with the major sports leagues. And then they got into prediction markets. It's a natural extension for them. They're keeping it in the sports arena, serving clients that want to bet on sports games. And now, today's announcement, they're partnering with one of the brokerage firms that many of our Bloomberg readers, BGC, is selling. They sold their licenses to operate an exchange that Fanatics will now use to list and eventually trade their own prediction market contracts. So they can still work with Crypto.com in offering prediction market contracts through them, but now they have their own exchange where they can list, trade prediction markets. They're going to start with sports. Eventually they could expand beyond that. But these two unlikely partners, they actually see this as a very likely pair. To them, they see this as a natural extension for both firms. The reason being, for Fanatics, they want the support, and when I say support, the liquidity, the trading, the pricing that a Wall Street firm can bring, like BGC. BGC wants exposure to retail. They also want to give some of their big clients exposure to prediction markets, which they don't currently offer. So now they can say, hey, look, we have this partnership with Fanatics.
Yeah.
They're operating this exchange that we just sold to them, the licensing that is, and here's another asset class that you can trade with us.
How many prediction markets do we need?
There's just going to keep being a slew, but it's really the question of who will dominate the space.